I know right now you're looking at S&P futures. You say they broke through a key support level. Spell it out for us. Walk us through the chart. We made it. What are you seeing in the chart? What's that key support level, and what does it say to you?
Yeah, I think when you're looking at the S&P futures, that's a December futures contract, and it broke down below 57.80. And that break below there was sort of this pattern where, we had such a huge run up from August. We had a little bit of a volatility event occur, that yen again, get 'em kind of action where people unwound the yen carry trade. And then the market rose and has kind of been topping out here. It broke below that 57.80 level. And so that's one area I'm looking for. We really haven't been able to get back above it. And as you see the futures trading lower, as you mentioned earlier today, this morning, that's a little bit of an indication that we just really can't get above there. So I'm a little bit cautious until we get above that 57.80 level.
So just to be clear, that's in your mind a bearish signal.
It is. And this kind of little pattern is almost a mini head and shoulders top. It's not like a wide range that a lot of technical traders look at. But when we're looking at a 5-minute chart and what's going to happen short term and this little increase in volatility here to start October, to me, it's a little bit of a bearish move here. And that 57.80 level was really a critical level that we broke below. And so I think now the pressure is a little bit to the downside in the near term right now.
What about the pricing when it comes to downside protection? Has that significantly increased? I mean, we have had a lot of big macro events just in the last recent days.
Yeah, we have. And you laid out the weeks ahead here and all the events that we have going on, geopolitical and whatnot. And we have started to see put traders in the S&P 500 start to uptick the premiums that they're willing to pay relative to calls on the upside, right? So a put is a protection to the downside on the market. And we've seen a heightened level here over the last, let's call it month or so, where basically traders are trying to buy more protection to the downside than they really want to the upside. That trend completely reversed. Really, for the last 2.5 years, it's been the other way around, where we continually saw call buyers come into the market, any kind of dip in the market, traders were in there trying to buy the upside call. The reverse has really happened over the last 2 months, and that's a little bit concerning that institutional traders are out there wanting this protection for the downside. But look, obviously, a lot of geopolitical tensions out there in the atmosphere, an election coming next month, couple that with another Fed meeting at the beginning of November, 2 unemployment reports really in the next month, if you consider this Friday and the week of the election week. So,
well,
and
Brian,
then couple that with earnings, a lot of volatility to be expected.
I don't want to interrupt you, but you're spelling out, I think, the next question I want to ask you. What's the options market telling us about these upcoming events? You mentioned it just about a month away. The election's coming up. We have big jobs reports. We have a Fed meeting. I mean, what is the options market telling us about all that?
Well, when we look at the level of volatility where the VIX is at, I'd expect over 1% moves in the market back and forth on a daily basis. Now, we saw that a little bit to start October. We haven't really seen that the last couple trading days. It's kind of hung in there. I think it's waiting to digest the unemployment report coming out this Friday here, and then maybe make a move here. But certainly expectations are heightened that we're going to get a fairly sizable volatility event or move here coming up in October.
All right, what about the NASDAQ futures? I thought there were some interesting moves there. Kind of spell that out for us as well.
Yeah, the NASDAQ is sort of interesting, right? Because when sort of the yen carry trade unwound a bit in August, we obviously saw a lot of selling pressure in the NASDAQ. Sort of it seemed like people were moving out of risky assets, heading into that 10-year note, the U.S. Treasury market, and the NASDAQ had some selling periods. And then all of a sudden it rebounded right back. Really here, that 17,000, 18,000 level, I should say. And now it's kind of also stalling out a little bit. So that's something I'd be a little worried about, that we get this carpet shakeout back to the downside, some sort of retracement back towards those lows that we saw back in August. Maybe not all the way down, but something where the market's looking for a little bit of a pullback.